Hello, everyone. My name is Jesus Nava. I'm in the Client Training and Education Department here at TradeStation, and I'm going to be the host of today's presentation. We have a great guest speaker today. His name is Jose Blasco. He's a dear friend of mine and a dear friend of TradeStation as well. But before we pass the microphone over to Jose, I have some very important announcements to make, starting with the disclosures. Keep in mind that every symbol and idea that we talk about here is for educational purposes only. It is not a recommendation of TradeStation. Active trading is not suitable for everyone, and it should only be done with risk capital. If you'd like to read more about these disclosures, please go to the TradeStation's website and you'll find all the disclosures at the bottom of the page. Right. Today's presentation is about a product that Jose Blasco developed himself. It's called AutoUFOs. He's been a developer in the Trading App Store, and it's a product that was designed to help you have a little bit more precision when planning your entries and exits. So all ears for Jose Blasco, and I'm going to pass the microphone over to him, okay? Jose, the floor is all yours.
Thank you very much, Jesus. A pleasure to be in the session with you today, with the whole TradeStation team, and with all of you, of course, most importantly, for all of you TradeStation users and traders. Welcome to the session. Today, we're going to be talking about auto UFOs. As Jesus said, it's all about adding precision, but many more things as well that we'll be discussing today. Before I start, though, as always, I would like to go over the typical disclaimer, and from there we would begin properly with the session. Disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. TRADDICTIV provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. Very good. So we got it. Okay. So the session is formally introduced, if you wish. Okay. So let's begin diving into the content for today. And very briefly, I would like to talk about our company, because by understanding the philosophy of our company, you would also understand the philosophy of the product. Our company is a company that uses trading technology in order to overcome, if you wish, the challenges of being human when trading. And those challenges basically are two main big challenges, which is number one, the lack of time that we have when it comes to everything in life, including trading. Lack of time to learn, lack of time to practice and take knowledge and make it and transform it into a skill, but also lack of time just to trade. And so technology that alleviates the lack of time is certainly something that we welcome. And this is part of the philosophy of our company, but also, very importantly, the management of emotions, which is another weakness of being human when trading. It's something that we always shoot for when it comes to the benefits, as you will see on when we apply the technology to our trading methods. Okay, so you will see that much more in a much more concrete manner as we go over examples and so on. To discover our apps, we have a second website as well that you could visit anytime, and you would also get more information. But again, instead of looking at websites, let's look at it ourselves. Okay, and in this case, introduce myself. Jesus did for me. So thank you very much, Jesus. You have a little bit of a written, more, if you wish, formal introduction here on the slide. But basically, long story short, I am a trader. My background was engineering before I got into trading, and therefore technology is part of what I do in my life, and certainly in trading too. So what I did is utilize all the benefits of technology and implement all of this into specific apps that help us to add a more precise, as Jesus said, but also more mechanical approach to trading, which is really important, because if you think about the goal of all traders, it's to be consistent with the results. And there is only one way to be consistent with the results, which is to be consistent with the actions that we take to identify and execute trades. If our actions were to be random, it's easy to understand that the results will tend to be random, depending on luck. Which obviously is something out there, but not something to rely on when we are looking at trading professionally or seriously. Therefore, mechanical action where probabilities are on your side is the way to approach trading. This is my philosophy as a trader. This is the philosophy of our company. This is the philosophy of the technology that we have built, as you will see. So the session summary for today would have us first to look at auto UFOs to understand better what is it, what does it do, how can you utilize it yourself, how can you utilize it by itself, or also combine with other techniques that you may be utilizing in the current times. We'll look at the subscription process, the download and the launch of the app inside TradeStation. The most important and probably the most fun part of the session today will be when we start looking at the applications, how do we use auto UFOs, and if your priority is simplicity, if you're a trader looking for very simple methods, so we look at utilizing auto UFOs by itself. We'll look at examples of that, but you can also combine it with other trading methodologies. There are many different methods on how to trade available out there in the world, and many of them make a lot of sense. So if you think about combining those different methods, basically you would benefit from an added probability by combining them all together. So we'll look at combinations as well. We'll look at the technology auto UFOs combined or applied, I should say, to different timeframes, and therefore applied to different trading styles, long-term, short-term, intermediate term, etc. And then we'll even look at applications of utilizing auto UFOs to do what is known as non-directional trading, where basically would be selling options, utilizing option strategies such as iron condors, credit spreads, selling options, collecting premium, and just allowing for time to pass so those options get to expire, and as an options trader you get to keep the premium, assuming that market doesn't move much and stays somehow trading within a range that will be defined thanks to auto UFOs as a piece of technology. We'll look at examples of all of this. Towards the end of the session, we'll kind of summarize all the key benefits, so you get to understand if after everything you've seen and everything you've learned in today's session, if really it makes sense for you to utilize it or not based on the benefits that provide. And in your particular case, I would be assuming, of course, that some of you attending the session today may be quite experienced in trading. I would also assume that some of you attending the session today may be newer to the markets, and therefore I'll be discussing all of this from different angles. So hopefully I can provide solutions and answers for all of you. Talking about answers, at the end of the session, we'll have a Q&A session. So I'll be more than glad to look at the chat box on the YouTube channel and read your questions and provide answers. But also I'll talk about the process for you to get a copy of the slides in case you're interested in having a copy of the slides. And also I'll show you how to get access to one of our apps as well, which is called Auto Climate, that you can also access, in this case, for free. Which is going to be a good thing to have in my mind. So I will be sharing all of this with you today. So anyway, so let's begin auto UFO. So first peek, let's take a look. How does it look like? Well, here is a screenshot of auto UFOs. Later, I will show you auto UFOs live on TradeStation as well. But the first thing that you can see is that, UFOs, which is normally a term known as unidentified flying object, or another way to say that is flying saucers. Well, guess what? We do have flying saucers on the chart, red color flying saucers on the top and green color flying saucers on the bottom part. So what do they represent? Because really the key is the flying saucers, even though to be more visual, we also added what we call the UFO bands, which is the horizontal zone as well, colored in green or red. So what are those drawings representing? Well, what they represent is on-field orders, which is the real reason for the acronym UFO. On-field orders are the orders in the market that are still waiting to get filled. The orders that got filled already, of course, they were very relevant sometime in the past, and the orders that got filled already, the orders that have been already fully executed, those orders may have produced market movements that were significant and could have been good trades in the past. The idea is, okay, the past is very interesting, but it's already past. Therefore, when we trade in the present into the future. And of course, the greatest impact for a trader will be what happens after you enter the trade, not what happened prior to entering the trade. Therefore, instead of looking at the markets from the point of view or the angle of where the orders got filled, a very intelligent approach to trading would be to think about where are the orders to buy or to sell, but the ones that have not been filled yet. Because if we were to find significant stack of orders to buy or sell that have not been filled yet, the moment those orders get filled into the future, those would be potential great movements of price that have not happened yet. And as a trader, you would be able to profit from that. So the flying saucers that we can see inside those UFO bands, those horizontal zones, they represent the location and therefore the prices of those unfilled orders, red color to sell, green color to buy. And you can see that the inner circle inside the flying saucer, actually that the meaning of that inner circle, it's where the app, when running the whole process and the whole logic of it, identifies the greatest concentration of unfilled orders. And therefore, that would be the very, very idealistic price point for you to trade. Even though you can give yourself a little bit more breathing room if you wish and trade the whole zone, the whole band, and that would be okay as well, for sure. But certainly if you were to shoot for where the greatest concentration of unfilled orders are, then the inner circle within the circle, that would be the key area in the trading band. Okay, so and again, green color means unfilled orders to buy. UFO stands for unfilled orders. Red color means unfilled orders to sell. UFO as well, in this case, stands for unfilled orders, but in this case, unfilled orders to sell. So one more comment I would like to make before I go deeper into this is that notice how some of the bands are lighter color than others. For example, we have light red, dark red. Just like with the green color, we have the same. We have light green, and then we have darker green. So what does that mean? Well, basically the density of the color, or maybe I should say the intensity of the color, represents the concentration of orders. So if you have a band which is of a darker color, then the app understands that there is a greater quantity of unfilled orders, and therefore the probability of a trade would be higher. If the band is of a lighter color, the probability is still high, but less high compared to if the band was of a darker color, no matter if it's green or red. We'll see this live later on. And when I talk about probability, probably some of you are thinking about what probability exactly is. Is it going to be 30, 40, 50, 60, 70%? What the number is? Well, I will show you that live later on. We'll do a little bit of an exercise, and that will become very clear, because all of this, of course, changes depending on the market, depending on the time frames, etc., depending on the institutional interest. If you were to apply AutoUFOs to a stock with very little institutional interest, then of course you have very few orders, and if they don't get filled, they get canceled. So then the probability would be quite low. And probably you would want to pass on trading such market. But if the market was to be a relevant market, such as, let's say, the S&P 500, Apple, a key stock, a key currency, a key commodity, then you would see probabilities of a pretty high value that make it very interesting for us to trade. Okay, but anyway, let's keep going here, because I would like to show you this in action. So here we got a chart with AutoUFOs, and this is just a little animation for all of us to understand the mechanics and see yourself utilizing this tool, so you could understand better how it can help you. Okay, so I'm just going to click play. Notice how the price of that particular market is entering the green UFO as we speak. That green UFO right there, price is entering as we speak, and I'm just going to click play, so you will see what happens the moment the market got into the UFO and we had a limit order to buy there. Price we got filled, the order got filled, and then the market started reacting to the unfilled orders, and therefore moving in the up direction, since the unfilled orders were to buy, and we know this because the color of the UFO was green. Okay, so we can see how the market is moving up there. Okay, I'm going to show you in the next slide an opposite example, which is going to be an example for a trade to the downside. Is going to be a shorting opportunity where we were planning on an entry. Let me go for the next one. We're planning on an entry, entering on the red UFO now. The red UFO represents unfilled orders to sell. So you can see how when the price got to that red UFO, the unfilled orders kicked in and started pushing the market down as those orders kept being filled, because when many sell orders get filled, basically they remove all the buyers, and when no buyers are left, then the prices fall. Is that making sense? Which is common basics or mechanics of price movement, if you wish. Okay, so basically, hopefully at this point, we start having a better understanding of what this technology and this application is doing. Even though, of course, now the sky is the limit on how many ways you could utilize that app, and I want to show you more of that for sure. But let's summarize a little bit what is auto UFOs before we go for specific examples. Now that you have seen it at a surface level, before we dive deep, let's re-summarize and explain properly in a structured manner what is auto UFOs. Auto UFOs is an app that is designed to enhance your trading performance. And that is done by adding more precision when planning entries and exits. And entries, of course, is either to go long or to go short. And exits, it's either to set targets, but also to have a proper location for the stops. Because a typical mistake that happens often to traders that are lacking precision is that you get stopped out and then that market begins moving in your direction the way you predicted it, but you are out of the trade because your stop was in the wrong location. So having the stop in the right location, having the targets in the right location, and for sure the entries, all of this is what we achieve utilizing auto UFOs, as you will see in the following examples. And what's beautiful as well, and this is the beauty of technology, really, this applies to all technology, is that we eliminate subjectivity, because the identification of those tradable prices based on on-field orders is not done by a human being running a process by hand. It's done by technology, and therefore computers don't feel. Computers are not going to be biased. Where human beings doing processes by hand, we are certainly biased all the time. Even if we are very experienced, we are certainly exposed to the weakness of human emotions. Like, for example, let's say you have, just to pick a trading style, let's say you trade support and resistance, and you draw support and resistance manually. And let's say you have a very good understanding on how to do that. But even though you have good understanding, good experience, and good skill, let's say you have been trading last week and you have executed a few trades, and let's say all of them have been profitable. Maybe now today you feel overconfident, maybe today you feel euphoric, and therefore the way you draw your support and resistance lines is not the same. And anything that may look like a support or resistance, you call it support and resistance, and you take a trade out of a weaker support or resistance, and then you lose. And it's not like you didn't know how to do it. Is that the emotions coming from the prior trades biased you into how to apply the method. The idea here is to substitute the human and have technology do the hard, if you wish, the digging and the market research in order to provide us with very easy to interpret information where there is no subjectivity, and therefore you know where to buy, you know where to sell, either for entries or exits. That's the idea. And also, talking about trading performance is not only money to be made, for sure. This is kind of probably the first thing that comes to your mind, but also saving time. It's another way to increase your performance, because spending less time to find trade ideas and their execution is another benefit that we obtain utilizing technology, in this case auto UFOs, as you will see. Auto UFOs assist traders to trade mechanically. I talked about this before. Mechanical action, consistent action leads to consistent results with more confidence and less emotions. Why? Because as you will see live in a minute on the charts, we're going to be able to get a specific reported statistical information when it comes to what happens to when you apply the app to a certain market. So let's say, for example, you have been trading the Nasdaq futures or crude oil or any market. Let's say you have been trading it for a while and you are used to what to get from that market. But today you decided to, okay, so now I'm gonna start trading a new market I never traded before. So maybe you are a very experienced trader and you know exactly what to expect from a specific market. But the moment you start trading a new market, you may not know what to expect. So one great feature of auto UFOs is that you're going to get statistical data in front of you all the time. And that's going to confirm if that is a good tradable market or not. And on top of that, before you start trading, you know what to expect. So if you were to, let's say your stats are going to be 62%, 65%, 70%, whatever. So let's use 70% just to use a round number. So 70% of your trades would have the tendency to profit, where 30% of the trades would have the tendency to not to be successful. So if you were to get 1, 2, 3 losses in a row, well, of course, it's less enjoyable than when we get profits. We all know that as traders. But at the same time, it's not like you're going to lose your confidence on your method, because you know that 30% of your trades in this case were supposed to not to be successful. And therefore, in other words, you know what to expect. That's going to help you with the confidence. And the more confident you are when you trade, the less emotional you'll tend to be. You will not get in revenge mode after you got 2 losses in a row, or you will not get in euphoria mode after you got 5 winners in a row, because you know that's likely to happen based on stats that you have seen before, and stats that you see every time before you trade. Okay, so you will see that live in a minute. All of this, of course, improves consistency, and kind of like an extra set of characteristics of auto UFOs is that they can be applied to all assets and all time frames. And therefore they apply to all trading styles. Okay, they can be used on their own or combined with other assets. Okay, and you will see all of this in a minute on real-time charts and also other examples. Okay, cool. So anyway, all of this would be kind of a first pass to understand what is auto UFOs. I would like to go quickly over the process of subscription, which is actually very, very simple. And from there, we'll dive into charts and examples, which is going to be the most interesting part of today's session, of course. So how to subscribe? Well, very simple. To subscribe to auto UFO, you need to access the TradeStation App Store, which you could access by utilizing the URL TradeStation.TradingAppStore.com. From there, you can either type auto UFOs on the search box, or the name of our company, which is TRADDICTIV. Okay, you can do both, or you can just use the direct link I just shared on the presentation, and therefore you go straight into the auto UFOs page, and here you can just click on the free trial if you want to trial the app, or just go for the subscription directly. You can do both from this button, these 2 buttons that show up here on the front page of the product page. Okay, so here's the direct link, which is tradestation.tradingappstore.com/products/auto UFOs. Okay. Now, once you have subscribed, you can launch the app in 2 ways. You can either insert the app as an indicator on any chart, or you can also use the ready-to-use workspace that you will find inside TradeStation. So let me quickly show you both. So to manually insert this indicator into a TradeStation chart, you would step 1, locate the toolbar, click on Study, Add Study, then look for the indicator section, pick auto UFOs, and then you just click OK. That's how you would do it. Again, you feel free to, at the end of the session, to ask me for a copy of the slides, and I'll be more than glad to have these available for you. But let me demonstrate that on TradeStation. So here's TradeStation. You would just go for Studies, Add Study. From there, you would look for auto UFOs, and the moment you find it, you then click OK, and automatically the UFOs show up on the screen. In this case, we're looking at the S&P, but if I was to change to the euro, so here is the euro with the buy and the sell on-field orders. If you were to look at Apple, so here is Apple with the buy and the sell orders. In this case, there's plenty of buy orders and not much of the sell orders, at least in this time frame, which makes sense. But anyway, so we'll get back into the app in a minute. Even though now you see it live, I will get to show you more about how to utilize it and things like that. Okay. So what is the other choice that you have to launch the app on your TradeStation? You can use the ready-to-use workspace to do that. You would just go for the TradeStation Store Update button on the apps bar, and from there you would just click on the launch next to the auto UFOs option, and that will automatically launch a workspace for you. So let me do it. I'm just gonna go for the app bar here. I would click on Trading App Store Updates, and from there next to auto UFO, I would click on the launch button, and the moment I do that, automatically TradeStation will load for me a pre-designed workspace with a couple of charts, with the UFOs, with a matrix, and of course then you can change all of this, but this is by default and it's ready to use, as I said before. Okay, very, very good. So anyway, so back to the presentation here, and now that we know what is auto UFO and how to subscribe and how to download it, so let's talk about calibration. Okay, and calibrating auto UFO, it's a key process. Okay, because it impacts how the analysis process to find on-field orders is carried out, and therefore it does impact the results. So I want to guide you a little bit on how you can do that, because it has a lot to do as well when it comes to your utilization and also your trading style, being a conservative trader or less conservative or even less conservative, all the way to being a quite aggressive trader if that was to be you. So I need to show you how to do all of this, because obviously those changes in calibration will impact the use of the app. And notice here in blue color how we have a number, 61.34%. These are the UFO performance stats. These are the statistics I was referring to earlier. So let me show you this. So if I go back into my TradeStation, and let's say, for example, I'm going to load crude oil, just to pick a different market. So here is crude oil. Okay, so if I was to access the settings of the indicator, the inputs, I should say, okay, so we have multiple possibilities that most of them affect the look and feel of the UFOs, but one of them on the top is calibration. By default, the app comes with 0.5, and calibration values range from 0 to 1. So it comes by default with 0.5, which is certainly a valid way to trade. But for you to really know if it's valid to you or not, because really calibration is personal, so you will want to type true next to show UFO stats. And the moment you do that and you click OK, then the app is going to show you a number, 66.88%. So first of all, let me explain what that means, and then I will show you how to take it to the next level. So 66.88% means that every time the app has calculated in the past, and in this case in the past means for the last 1,500 bars, which is the data I have loaded on my chart as we speak, every time the app has identified a UFO, either green or red, no matter the color, the app has calculated what happened every time price came into the UFO. Okay, when it comes to, did price bounce out of the UFO, or did price go through the UFO and therefore that UFO failed? Also, if price bounced from that UFO and started moving in the expected direction, how far did price go? Right? So this is what this number measures. And basically what it measures is the amount of times that when price came into a green UFO, price turned and traveled all the way to meet the opposing red UFO. But also it measures every time price came to a red UFO, how often price turned and started falling down until it met the opposing green UFO. In other words, how often price travels from UFO to UFO, no matter the color, and how often price didn't react to the UFO and price went through. Okay, so 66%, okay, price bounced from that UFO and went and traveled all the way to the opposing UFO. That's what the results are showing us here. You could certainly trade stocks where you may get a much worse result. Okay, for example, if you were to trade a very illiquid stock, such as a penny stock or something like that, maybe what happens is that the larger market players that place those orders in the market, if they don't get filled during market hours, okay, maybe at the end of the day they just go ahead and cancel those orders. Okay, and next day on the chart you may have a UFO on the chart, but it doesn't work too well because those orders have been canceled. Why? Because there is no institutional interest. For sure, when we deal with markets like crude oil, Apple, Johnson & Johnson, McDonald's, S&P 500, the euro, the pound, the yen. So, of course, those markets are large and therefore they have plenty of on-field orders, and therefore you will get to see nice figures when it comes to performance. Okay, so knowing that in this case, 66% of your trades would create the desired move, well, that may open the door, if that matches your trading style, to go ahead and trade. Also, those stats depend on the time frames, because if I move from the 15-minute time frame to the 5, for example, notice how the performance now is more. Why? Because the distance between UFOs in a lower time frame is less, and therefore if you got less travel to do to reach the opposing UFO, then it's more likely for you to get there. Where if I was to look at a larger time frame, for example, daily, the distance to travel is more, and therefore you will get to see lesser figures. Okay, and certainly crude oil is a market, being a commodity that is impacted by many things that happen out there based on inventories and so on. But if you were to look at other markets like the S&P, notice that the daily time frame still produces much better probabilities. Okay, and again, it has a lot to do with the nature of the market, and most importantly, it's revealing behind the scenes what are the larger players doing with their orders when they don't get filled in the first place. Do they leave them in the market until they get placed, or do they just cancel them? Okay, so you get to understand the nature of the markets, or another way to say that is the nature of the market players behind the scenes, that the ones that we care about, which are the largest ones. Okay. Anyway, so coming back to, I'm just back to the 15-minute time from here. So in this case, we are getting a stats of 56%. And this, by the way, is because we are loading very, very little amount of data here. So let me load more data to get a proper quantity of samples. Okay, you see, when we got more data, we got more samples, we got more accurate stats. Okay, but beyond the accurate stats that we have here, what I would like to look at here now is the calibration. Okay, so by default it comes at 0.5. Okay, so what happens if I make it 0.6? Well, if I make it 0.6, 60.38% becomes 64%. So notice I have increased my probability if I increase the calibration value. What happens if I decrease the calibration value? For example, 0.3. Well, if I decrease the calibration value, notice how also I decrease the probability. Okay. So in one hand, you would say, okay, what about we just go for 1? Well, yeah, well, in life, we need to find balance. Okay. So in trading, we also need to find balance. And I don't mean you need to use 0.5, but what I mean by balance is the following. Like everything in life, quality and quantity doesn't come together. When you have a lot of quality, you have less quantity. And when you have a lot of quantity, then you have less quality. So what you would want to think when calibrating the app, and this is kind of revealing to you what's happening behind the scenes with the app, is that you will want to think about how active you want to be and how risk averse you are. If you happen to be very aggressive, I would guess that you want to be very active too. So what would you want to do? What you will want to do is you will want to use a lower number, okay, 0.5, 0.45, something like that. Well, if you were to do that, notice how you have more UFOs on the screen. Probability is still okay, but you have more UFOs. So in other words, you have more tradable opportunities. They are of a little bit of a lesser probability, but they are more. If you were to be more conservative and you wanted to have more probability, and trade less often, what you would want to do is you will want to use, let me get in the right place, here we go. You will want to use a larger figure, for example, 0.7. It doesn't need to be that one. You will need to work around the figures to find what you like. And basically you would find less UFOs. Notice how those UFOs are wider. Okay, and therefore the distance between entry stop is a little more, so the probability of being stopped out is less, as you can see, 65% now, but you would have less trade available. Okay, so calibration basically is to adjust the app to your trading style. Okay, and remember that one of the key benefits I discussed with you before was that the app would work very well on helping you to develop your own confidence level. Well, this is something, let me show you something that you may want to do that is very powerful. So let's say you never traded the S&P before. Okay, and you are about to trade the S&P using the 15-minute time frame, and you decided 0.7 for calibration makes sense to you because you are a little bit conservative, but not that much, whatever, and you got to 0.7. So what you will want to do now is to come to the app here and start loading data. For example, here I'm using randomly January 1st, 2010 as my first date, and just to use 1 year at a time, I think it's a good reference, I'll do December 31st, 2010. So if I was to load that, basically what I'm doing is I'm loading 1 year of data for the S&P 500 with that calibration, and this is giving me 69% throughout that whole year. But what if instead of trading in 2010, you have traded in 2011? Let me do this. Okay, I'm just inputting the one in the wrong place. Sorry for that. Okay. 2011, here we go, and 2011, right? So what if you did the next year? Well, 69% became 66%. And what if you did in 2012? 2012. 2012. So stats became 68. What if you did 2013? Okay. And notice I'm going 1 year at a time to be able to understand a market I never traded before, if that was to be your case. And now you're going 1 year at a time and you're like, okay, 68, 66, 60 something. It's kind of similar, right? So this is going to help you understand the nature of that market, and therefore how confident can you be as a trader that things are going to be okay. 2014, 69%. So you can see that, right? Let me go back to all the way to 18 or 19. So we get close to current data, because I want to show you another thing that I would recommend you to do. 2018. Okay, just 2018. No. Okay, well, it seems I'm having fun with the year. 2018. Here we go. I got it. So 2018. So now we got 66%. So you can see that your stats are varying in a very narrow range, which means that you got something helpful from a statistical point of view in front of you. Okay, and now 2019 we got 66. Okay, so now let's say you are like, okay, I've been looking at this market, and it seems that it makes sense to utilize this type of technology by itself or combined with your current methodology, which I'll talk about that in the following examples. Okay, I said it before, but I didn't show you yet. Okay, well, now what you will want to do is you will want to go to the next one, which is to say, okay, what if I trade it from January to March 19? Okay, to March 19. What if I trade it 3 months? Is it going to be 66 or is it going to change a lot? In 68, it's still the same. What if I trade it during I don't know, from April to May, only 1 month? So is it going to change a lot or is it going to be the same? 67%. And therefore, by doing this, and you can see the results are quite similar, so then you will be able to conclude that, this market has a lot of institutional interest. On-field orders are in place. Those on-field orders can be helpful for your trades. And now every time you see one of those UFOs, where you can see all of those UFOs have different sizes, the inner circle is of a different shape because the on-field orders are located in different places every time. But the app is adapting to it and is giving you the tradable prices and the tradable zones that you need if you were to use such technology. Okay, so I'm just going to go back to real-time data, go back to the current date, and keep going with the presentation, because I believe at this point, hopefully I've done a good job to get you introduced to what the app is and how does it work, what's happening behind the scenes, how to calibrate, how to adjust it to you, etc., etc. Okay, so now I would like to talk about using AutoUFOs. Okay, I have a few comments from users. They're probably better when I send you the slides. You can read these yourself. You also have those reviews and more in the TradeStation TradingApp Store, so you can read yourself. But my point here is that every one of those users utilize different techniques, different methodologies. But in the end, for all of them, they are benefiting from the mechanical approach to trading. They are benefiting from an increase of probability thanks to more precision with entries and exits. And then saving time. Okay, so those are some of the key components. Okay, so how would you use AutoUFOs by itself? Earlier, I showed you this video. Let me be a little more detailed now. So that UFO would represent your entry. Okay, if this is going to be your entry, well, below the UFO should be your stop, because if you expect on-field orders to be found where the green circles are, then from there, price should move up. And if price moves down below the green circles, there is only a reason why that happened, which is there were no on-field orders waiting to get filled. Okay, they had been canceled. Okay, or they have been filled, and therefore you would want certainly to be stopped out. And of course, you would take a loss at the time, but you would not want to stay on the trade, crossing fingers and hoping for the best. That would not be a serious way to trade, isn't it? So then, of course, we also need to plan for the exits, which could be a final target, and this could be your trade. Where you are risking the distance between entry and stop, and you are shooting to make the profit, which is the distance between the green UFO and the red UFO. Another way to say that, the white space on the chart is your profit. Okay. Another more conservative way to act, okay, taking advantage of the beauty of TradeStation technology, would be to use a multiple target order using the matrix, for example, where you can set an intermediate target and do some scaling out, just to be a little bit safer. So now you scale out of a trade and then you can take another trade in parallel, things like that. Okay, just to open your mind to things that could be done. And you can see now, if I click the play button, I'm just gonna go fast forward a little bit. So price came to where the entry was, and from there started moving higher, because the unfilled orders were actually the ones responsible to push the price up. Okay, the selling opportunity that we saw earlier. Let me be a little more detailed. Same story. You had the entry, in this case, a short entry where the red UFO was. You had a stop above, protecting in case the market was to rally up, which is unlikely because the sell unfilled orders are likely to push it down. But it could happen because the unfilled orders could be canceled. Anything could happen in the market, right? Any event could happen. And immediately that creates institutional reaction by either adding or canceling orders or both. Okay. The green UFO would be your target. Okay. And you can also have an intermediate target somewhere in the middle. So all of those things could actually, I would say, should be done every time we trade. Okay, so here are examples of many users using different techniques doing the trades. Okay, here we have a trade trading the euro contract. This, by the way, it's those are extracts of our Facebook page, because that way I can give you a little more exposure to not only what the app is, but how our users of the app utilize the apps. And we have a collection of users that are kind enough to post their trades on our social media pages, in this case Facebook. Okay, so the idea here from the trader MK was to trade the EC, which is the euro contract. Okay, in this case, this other trader, Chuntan, was utilizing it to buy S&P 500 intraday, trading intraday futures, where the prior trade on the left was swing. It was not an intraday, it was a swing trade, multiple days in the trade. And here, another case here where another trader, Milan, in this case, was utilizing only UFOs, as you can see, for an intraday trade with futures as well, okay, with the Nasdaq futures in this case, using a 10-minute time frame. Okay, so these are examples from users. Okay, those are other examples where you can see AutoUFO being used as a booster. What I mean by booster in this case is adding more probabilities to other methodologies. For example, you can see here this trader, it's a little small in the screenshot if you wish, but I'm sure you can see there is a moving average on the screen, right? So this is a moving average trader who expect a reaction to the moving average, because let's face it, a moving average may act as a price point, could be, let's call it a dynamic support or resistance if you wish. We could call it in different ways. And therefore, my point using on-field order terminology is that the moving average may act as a tool where on-field orders are added at that price. So what Frank is doing here in the trade is defining a trend, wants to trade in the direction of the trend, but only wants to trade around the price of an average, because the average is acting as a dynamic support or resistance, adding on-field orders, but also is doing it in a way where he confirms that's the case, because the on-field orders shown by AutoUFOs confirm the on-field orders he was expecting out of a moving average, and takes the trade with a confluence which adds probability to what the moving average would be able to do by itself. Here we got another example where an options trader, that would be Alan, is selling a bear call spread. Why? Because you got a Bollinger Band where price gapping above the Bollinger Band implies that you have a high probability situation for price to come back inside the Bollinger Band based on probabilities. But most importantly, outside the Bollinger Band, you don't have white space. You have 3 red UFOs stacked on top of each other, overlapping each other. It's kind of like a big, fat group UFO, right? And that another way to say that is many sell orders waiting to get filled that are very likely going to push the price down. And this particular trader, using a gap up on earnings for Netflix, was selling a bear call spread to take advantage of that. Okay, so you can see here different combinations. In this case, we have another case with Simone doing futures intraday using floor trader pivots, as you can see, basic indicator, standard indicator, which is part of the TradeStation repertoire that you can just go ahead and insert on your charts easily. But then you overlay AutoUFOs, and now not only you have a floor trader pivot point on your chart, but that price point is now, let's call it, validated by a UFO lining up at the same price that is telling you that not only that may be a relevant price point for the intraday session, but on top of that, you got on-field orders to either buy or sell at that price. Okay, so all of this increases the odds for proper trades to be executed. A multi-style UFO, we talked about UFOs can be used and applied to different assets and different timeframes. So in this case on the left, we are looking at a trade where the trader is trading, is putting together a swing trade. And notice the comment, it says, I am long the Swiss franc since August 1st. So this is a many days, multiple week trade, which is done using AutoUFOs. Obviously, the time frame utilized was a larger time frame in this case. The case in the middle here, we have another trader, Julia in this case, doing a trade with the euro. Okay, where she was looking for confluence with a moving average with the UFOs, looking for trend continuation, etc., etc. And all of this was done with combining techniques. Okay, the case on the right as well, we're looking at Milan again, trading crude oil futures. Okay, which in this case it was looking at a quick trade. The target was hit in a matter of seconds. Okay, this is a trade taking with a volume time frame. So this is not even a time frame; it's a volume time frame. So you can see going from right to left, volume time frames for very quick trades. The time frame in the middle, 60 minutes, 240 for, let's say, intraday trading. In this case, spot forex, and then on the left, multiple week trades. All of this is done with UFOs, with or without other additional tools combined. Okay. And then we also have the world of non-directional trading, which I mentioned earlier. And in this case, I would like to briefly give you an example or explain what is non-directional trading, because it's less common, and therefore some of you watching the presentation today may not be fully familiar with what non-directional trading is. So just out of clarification, non-directional trading means that you identify prices in the chart, price points in the chart, where that market is not likely to reach that place on the chart anytime soon. So you may get there, but it's going to take a long time. And why is that? Well, first, because there is a lot of vertical distance from the current price to the upper blue line, or vertical distance from the current price to the bottom blue line. But on top of that, for price to get there, precisely because there is a lot of distance, a lot of time will need to pass. But on top of that, we have green UFOs, where if price goes down here, is likely to bounce back up. If price goes up and reaches the red UFOs, then price is likely to bounce and fall again, and therefore remain in some sort of a range, which allows options traders to go ahead and sell options above and below the range. And notice how price moved up and down, but stayed within the UFOs during a predefined period of time. So if you were to use that predefined period of time as the expiration date for an options contract, and you were to sell options above and below, do let's say an iron condor, then you would be able to profit from that. Okay, and the UFOs will help you to define where to sell your options. Okay, you can see here we have Chuntan that took two trades during the a live session that I did, and one was a United Airlines vertical spread, the other one was an iron condor with Tesla, and both trades ended up with 80% profit, meaning that all the premium collected, he kept 80% of that premium collected, which is a very successful trade. Okay, and again, it's all about probabilities. Options is a great tool to use, but options without a proper timing component could be very problematic, because the market can move against you very badly and hurt those options trades very, very, problematically. So in this case, the UFOs help you to define the range for a non-directional trade. Okay, over here we have another trader looking at options to be used intraday and selling credit spreads on the S&P 500 that expire the same day, identifying price points. Okay, in this case, you got multiple green UFOs below price, so how likely is going to be for price to go below all those UFOs if all those UFOs represent buy on field orders? Well, it doesn't look like it's going to be likely to go below those UFOs. On top of that, those UFOs happen to be, the last one happens to be beyond the Bollinger Band, which also based on probabilities suggests that price is not likely to go there. So what the trader was doing was selling options below the red line and collecting a profit with high probability identified in an objective fashion. Okay, and here another example as well, combining UFOs, Bollinger Bands for an earnings play, trading earnings on Facebook in this particular case. Okay, so anyway, so key benefits: we believe that consistent action leads to consistent results. Therefore, randomness or hope should never be part of your trading game. Auto UFOs helps you to act mechanically, removing the human components when planning executions, as emotions and subjectivity are probably the biggest enemies of a trader looking at trading seriously, right? So benefits: more precisions with entries and exits without any subjectivity, reducing the tedious and time-consuming process when identifying trade ideas, acting as a probability enhancer when combined with other trading techniques, which is optional, realistic expectations when trading thanks to a calibration process that reveals statistical performance measurements and allows you to adapt the app to your personality and trading style, increasing the trader's confidence, which makes easier managing your own emotions even when you go ahead and begin trading markets that you never traded before. And it works with all asset classes as long as we have a chart. Okay, it could be cryptocurrencies, it could be spot forex, it could be stocks, it could be options, it could be forex, futures, it could be commodities, it could be indices, it could be bonds, you name it. Okay, it works with all time frames and therefore applies to all styles of trading and investing. Okay, so this, my friends, is my presentation, and I'm going to take a look at the chat box to see if any question was written during the presentation, so I'll be more than glad to take care of that question and give you a proper answer. In any case, if I was to miss any of your questions, or you had questions watching this later on recorded, or you didn't think about it at the time, but then you have a question, feel free to send us an email to rich@tradictive.com. Also, if you would like to have a copy of the slides of this presentation, we'd be more than glad to send you a copy. Same email, rich@tradictive.com. And also, apart from Auto UFOs, which is the app that we have described today, that you have accessible on the App Store, of course, I would like to make you aware as well that we have another app called Auto Climate. So if you were to come to the App Store, and you were to type on the search box, you were to type the name of our company, you will get to see our apps, Auto UFO and Auto Climate. And as you can see, Auto Climate, that one is a free app that tells you what the climate in the market is, what is the current market environment. Is it a market where you should be thinking of being a buyer? Is it a market where you should be thinking of being a seller? Is it a market where you should be thinking it's not time to trade? What type of market you have? And then when you combine Auto UFOs with Auto Climate, then you really have a very easy, very simplistic trading plan where once you know if you should be a buyer or a seller or not time to trade, the next question answered by Auto UFOs is, okay, so which is the price at which I'm going to enter and which is the price at which I'm going to exit in case I'm right or in case I'm wrong, right? And by using those two apps combined, you can have a very simple trading plan. Or as I said, and you have seen from many of our app users as well, you could certainly overlay on top of UFOs, Fibonacci's, Bollinger Bands, indicators, Ichimoku clouds, you name it, any other trading technique, including fundamentals. Okay. Anyway, so questions. Let me see. Yes. Shakia Deep, today the video today was about the apps. So the options examples were just examples really to illustrate the app application. Okay, but if you are interested in knowing more about options and so on, feel free to send us an email with a specific question, and we'll be happy to get back to you. Arda, what if the trader is not subscribed for level 2 data? Will your tool still work? Yes, the answer is yes, Arda, because the tool is actually not utilizing level 2 data. The tool is looking at other components, other type of market data, and doing a lot of analysis and extrapolation to conclude where the on-field orders could be. Level 2 being very powerful, a very powerful set of data, is also often used by computers that belong to large market players, where they insert very big orders and then cancel them at the speed of the light. And a lot of times, or the opposite, many iceberg orders in those level 2 screens. And many times the information you see being real may not be that useful in the market in which we live, in the world in which we live, where the markets are traded by extremely fast computers co-located in the same buildings at the exchanges, and orders are added and canceled at the speed of the light, and level to screen sometimes is a little tricky. Okay, so we prefer to rely more on level 1 data, and then the app does incredible calculations to be able to conclude where the on-field orders are. So long story short, no need for level 2 ARDA. Yes, to get a copy of the slides, just send us an email, please, rich@tradictive.com, and we'll be more than happy to do that. Yeah, the hidden orders, that's what we're looking for, right? That's what we're looking for. And of course, it's all about extrapolation and probabilities. There is no way to have 100% certainty of where those hidden orders are, but the app does a very good job, as you have seen, based on probabilities, to have a good measurement or understanding of where those orders should be, or where is it more likely for those orders to be. Okay, very good. So I'm not sure if I am missing any question. I'm just going back in time a little bit on the chat box. It seems I didn't miss anything. Yeah, so I believe that if that's the case, I just keep looking at the chat box. Really want to take advantage of this time being connected live and make sure that I don't leave any question unanswered. What is being calibrated? What is being calibrated, NFWL, is the process, is how much of a sensitivity the app applies when identifying those on-field orders. And this really, the impact for the trader has to do with how active you become using the app, or how passive you become using the app. Okay, if you use calibration values of a greater number, basically, as I demonstrated earlier, you end up with less tradable opportunities, but they have a higher probability of success. Where if you use lesser calibration settings, then the app becomes much more sensitive, and therefore you have more trading opportunities, but the on-field orders that are being identified may not be such large quantities of orders, and therefore the probability is less. So you are more active, but you succeed a little less often. Where if your calibration settings is greater, then you are less active, but you succeed a little more often. And therefore, basically, calibration is done to kind of adjust the sensitivity of the app, so you can adjust the app to your particular mindset and trading psychology, which in the end defines who you are as a trader, and what's your mindset. Okay. When using shorter time frames, will the app give false entry signals? How should you avoid that? This, Craig, would also depend on other parameters, because you are correct. What you said is very relevant. So if you were to use a very, very tiny time frame, of course, then everything becomes more, let's call it noise, and less relevant. So the way I particularly utilize the app, and I would recommend you to think about it, it's I go through a multiple time frame analysis process. So I use AutoClimate, which is another app which we are not discussing today, but I use AutoClimate to understand the climate of the market using a little bit of a larger time frame. And by understanding the climate on a larger time frame, then I am very happy and very confident executing my trades in the lower time frames as well. But I make sure that in the lower time frames, I am not trading against the climate, because that could produce false entries, as you said very accurately. Let me see. Mike. Hey, very good to see you, Mike. I just I read Mike first, and then I went for the question, and then I realized your last name. Very, very, very happy to see you, Mike. Great pleasure to have you here. Very good. That is like using standard deviation. Similarly, because in the end, you're correct. Trading is all about probabilities, isn't it? We don't measure ourselves as traders in a way where you have executed 5 trades and then you conclude if you're a good trader or you're not. For you to conclude if your trading methodology is proper or not, you do need to collect a greater data sample data, isn't it? And therefore, so in a similar way, compared to the concept of standard deviation in pure probabilities, what the app is doing is collecting a large sample of data, and looking at what happened, how often price reacted to those tradable price points where the unfilled orders were at, and how often not only it reacted to it, but you travel from green to red or red to green, right? So you know what you have in your hands. That's the ultimate goal. Akil, the app, a very good question about the average reward to risk ratio. That's another very relevant question. So the app is only giving you statistical information when it comes to reaction to the green UFOs and the red UFOs, in order for you to be able to have a proper plan when it comes to what is the calibration setting that you want to use to align the app, as I said before, to your trading style. A different story would be performance, and performance in dollar values would depend greatly on reward to risk ratio. So your question is certainly very relevant. But remember what I said before: executing the trades not only depend on one time frame, it also depends on other time frames. Therefore, it would be quite complicated to be able to have everything summarized. It could only be done if a trader was to share all the rules of a trading methodology and we were to program everything, then you would be able to come up with reward to risk ratios and many other parameters. So keep in mind that the probability certainly is a the UFO performance stat is a very significant measurement, because sometimes you will apply auto UFOs to, as I said before, let's say a penny stock that got no institutional interest, and you will get to see that the statistics maybe are 25%, and it doesn't mean there is something wrong with the auto UFOs or there is something wrong with your internet connection or TradeStation. What it means is that there is no unfilled orders in that stock, there is no institutional interest, and therefore the probability is very low. So by finding that information, you basically conclude if you should trade that market or not. Okay, but a different story right now is how much money would you make with it, which depends on how many trades you take per day, which time frames do you use, what is the size of your trades, many other components, and of course that exceeds the purpose of the calibration process that I described earlier. Okay, so your question makes absolute sense, 100%. But as I just said, it kind of exceeds the purpose of that figure. You will want to see Roku today in a 5-minute time frame. Yes, absolutely. I would be happy to do that. And by the way, I have, I believe, 2 more questions to take, and I will conclude the session because, of course, we have limited time. So I will be respectful to that. Okay, so here is Roku in a 5-minute time frame. Again, I would like to add more data to have more reliable stats. Okay, so we got 71% in the 5-minute time frame. Well, actually, not yet, because we still have pending data on the upper left. So TradeStation is still my TradeStation is still downloading data for Roku. Here we go. Now is all downloaded. 70.68%. That's what it's showing today. Very good. Very good. Very good. Yeah. Nima, this tool has nothing to do with volume profile, and the reason why is very simple. If you think of volume as a concept and therefore volume profile, what is being measured is where the volume took place. And if you think about what volume means where the orders got filled, where this app identifies where the orders are still unfilled instead of where the orders got filled. So it's a completely different concept. It's somehow counterintuitive, but certainly very powerful, as you can see. Very good questions, everybody. Again, we're going to have to conclude the session here. It's been my true pleasure to be part of the session today. And always, to be honest, with TradeStation. Thank you so much, Jesus, for having me. Again, super pleasure. And again, one more time, I will repeat, you have my email available, rich@tradictive.com, if anyone needs any further clarification or anything else. Okay. Thank you very much. And for sure, very special time of the year. I would like to also take advantage of this time of the year to say for all of you, Merry Christmas and Happy New Year, and have a fantastic 2020. Bye-bye, everybody.
Okay. All right, everyone. Thank you for joining us. Thank you for being here in this presentation. We want to thank Jose Blasco for this great presentation. And this has been recorded and it's going to be uploaded to the TradeStation YouTube channel. So if you'd like to review the content, make sure to visit our channel. Thank you, everyone, for your participation and for being interactive. And I hope to see you in a future event right here at TradeStation. Goodbye, everyone. Did you stop it?